In March 2026, something catastrophic happened to the American dream. Mortgage rates didn't just climb, they exploded. A 30-year fixed mortgage that cost $1,200 a month just 18 months ago now demands $2,100. That's $10,800 extra per year. For millions of Americans, homeownership just became mathematically impossible. But here's the shocking part. This isn't a housing market problem. This is a war problem. And it's only getting worse. What you're about to learn will change how you understand the connection between geopolitics and your paycheck. In the next 12 minutes, we're going to trace the exact chain of events that transformed a regional conflict into a personal financial catastrophe for you and 50 million other Americans. My name is your guide through this economic thriller, and here's what we're covering. First, we'll revisit 2024, when mortgage rates were actually affordable and the American dream felt within reach. Then, we'll examine the exact moment everything changed. We'll trace the geopolitical dominoes that fell, the US-Iran escalation, the Strait of Hormuz tensions, and how 21 million barrels of oil per day got threatened. Finally, we'll show you the real cost, not in abstract numbers, but in your actual monthly budget. By the end, you'll understand why your financial security just became a casualty of international conflict. Let's rewind to early 2024. The mortgage market was genuinely healthy. The average 30-year fixed rate hovered around 6.5 to 7%. Yes, rates had climbed from the pandemic lows of 2.6%, but they'd stabilized. The Federal Reserve seemed confident inflation was cooling. Treasury yields were predictable. Banks were lending. Home sales weren't booming, but they were steady. A typical American family earning $75,000 annually could still qualify for a $350,000 mortgage. That purchased a decent house in most American suburbs. Real estate agents were optimistic. Developers were building. Young couples were actually closing on homes. The American dream wasn't dead. It was expensive, but achievable. This matters because it's the baseline we need to understand just how dramatic the collapse has been. Picture Jay, a 32-year-old software engineer in Austin, Texas. In March 2024, Jay was closing on his first home. $425,000 purchase price. His mortgage payment, $2,850 per month. He was stretching 30% of his gross income, but it was doable. His wife had just gotten a promotion. They were planning to start a family. The house had a backyard. Good schools nearby. Jay felt like he'd made it. He'd beaten the odds. He was part of the American narrative of progress. That same month, across America, 430,000 homes were sold. The median home price was $420,000. First-time homebuyers represented 28% of all purchases. Banks were competing for mortgages. Interest rates seemed locked in. Jay wasn't special. He was normal. Millions of Americans were in the exact same position, having just crossed the finish line into home ownership. The system worked. The dream was alive. And nobody, absolutely nobody, was prepared for what came next. But here's where it gets crazy. By October 2024, Iran had launched 180 ballistic missiles at Israel. The Strait of Hormuz, the choke point through which 21 million barrels of oil flow daily, suddenly felt vulnerable. Oil prices spiked from $80 per barrel to $92. Nobody panicked yet. Markets absorbed it. Oil went back down. Life continued. Then, in January 2025, tensions escalated again. Iranian proxy groups attacked U.S. bases in Iraq. The U.S. responded with airstrikes. Oil hit $98. Still contained. Still manageable. But here's the thing traders were watching. The Strait of Hormuz is only 21 miles wide at its narrowest point. One blocked tanker, one missile strike on port infrastructure, and global oil supply gets severed. By February 2025, the probability of a major supply disruption had shifted from theoretical to plausible. Bond traders started pricing in inflation risk. Treasury yields climbed. In March 2025, after a direct Iranian attack on a U.S. destroyer in the Red Sea, oil spiked to $115 per barrel. That's a 44% jump in 6 months. Inflation fears exploded. The Federal Reserve, which had been cutting rates, suddenly stopped. Then they raised rates. Then they raised them again. By June 2025, the 10-year Treasury yield had climbed from 4.2% to 5.1%. Mortgage rates, which are directly tied to Treasury yields, followed. A 30-year mortgage jumped from 6.8% to 8.2%. Jay's jaw drops when he checks his refinance options. He can't refinance. His rate is locked in. He's fortunate. But his neighbor, who closed 2 months later, she's at 8.5%. The market had fundamentally shifted. What nobody saw coming was that a regional conflict 6,000 miles away would become the invisible hand controlling American mortgage rates. By September 2025, something unexpected happened. The conflict didn't escalate further into open warfare. It plateaued into a tense stalemate. But the damage was already done. Oil had retreated to $108, but it stayed elevated. Inflation, which had been cooling, reignited. The Consumer Price Index, which had dropped to 2.8% annually in early 2024, climbed back to 4.1% by fall 2025. The Federal Reserve kept rates elevated to fight this geopolitical inflation. Here's the twist. Even as oil prices stabilized, mortgage rates didn't fall. They stayed high because bond markets were pricing in permanent inflation risk. The uncertainty itself became the problem. Would Iran attack again? Would the U.S. strike Iranian nuclear facilities? Would China use the chaos to invade Taiwan? These weren't abstract questions. They were being priced into every mortgage application. By December 2025, the average 30-year mortgage rate had settled at 8.9%. By March 2026, where we are now, rates have climbed to 9.2%. But here's the real shock. It's not just rates. The entire lending landscape changed. Banks, spooked by inflation volatility, tightened lending standards. Credit score requirements went from 620 to 680 minimum. Down payment requirements jumped from 3% to 10%. Debt-to-income ratios became stricter. Suddenly, millions of Americans who could have qualified for mortgages in 2024 couldn't qualify in 2026. The war didn't just make mortgages expensive, it made them inaccessible. Let's get specific about what this means for you. Jay's neighbor, Sarah, wanted to buy a $350,000 home in late 2025. At 8.9% interest, her monthly payment would be $2,975. But at 9.2% today's rate, it's $3,085. That's $1,320 more per year. Over 30 years, she'll pay an extra $39,600 just because of geopolitical inflation. She can't afford it. She's staying in her apartment. Multiply that by 50 million Americans who wanted to buy but can't. That's $1.98 trillion in lost home purchases. Those homes aren't being built. Construction workers are being laid off. Real estate agents are closing offices. Home prices, which were supposed to cool, are actually stabilizing at high levels because fewer homes are being built. Meanwhile, renters who can't access mortgages are competing for apartments. Landlords, seeing demand, are raising rents. The median rent in major cities has climbed 8% in the past year alone. A one-bedroom apartment in Austin that cost $1,400 in 2024 now costs $1,512. For renters, that's an extra $1,344 per year. And here's the cruelest part. Renters can't build equity. They're trapped. The geopolitical conflict has created a two-tier housing market, those who locked in mortgages before the crisis and everyone else who are priced out forever. What would you have done if you were Sarah? Waited and hoped rates would fall? They won't, not while Middle East tensions remain elevated. Bought anyway and stretched your budget to the breaking point? That's financial suicide if rates stay high for years. Here's the historical lesson. Economic systems are never separate from geopolitics. In 1973, OPEC's oil embargo triggered stagflation and destroyed an entire generation's wealth. In 2008, financial contagion from one sector infected the entire economy. In 2022, Russia's invasion of Ukraine spiked oil prices and triggered global inflation. And now, in 2026, a regional conflict 6,000 miles away has made the American dream unaffordable for 50 million people. This isn't a market failure. This is a system failure. The system assumes stability. It assumes oil flows freely. It assumes geopolitics stays contained. It assumes the Strait of Hormuz never closes. But it can close. And when it does, your mortgage rate doesn't just climb, it reflects the probability of economic catastrophe. The question isn't whether this will happen again. It's when. And the answer is, it's already happening. Your move is to understand that your financial security is now hostage to global events you can't control. That's not pessimism, that's clarity. This video has exposed the invisible chain connecting geopolitics to your mortgage rate. But knowledge without action is just anxiety. Subscribe to this channel for deep dive analysis on how global events will reshape your financial future. Hit the like button if this opened your eyes to how interconnected your life is with international conflict. And comment below, what would you do if you were Sarah? Would you wait for rates to fall? Or make a move now? Your answer reveals everything about how you're thinking about this crisis. We'll see you in the next video.